All right, hey everyone. It is 2:30. Been digesting the closes as we talked about earlier. Wild day in the markets, really brought upon by the news out of Russia, Ukraine, where apparently a drone blew up over the Kremlin and everyone's going crazy. But before that happened, what we were set to do was go negotiate the grain corridor that allows passage through the Black Sea. So, this is chapter like 27 of that story over the last a year and a half. So, nothing really new has changed because, in a war zone, you would expect war to happen, right? Like drones blowing up. But nevertheless, it got our market spooked. And I want to show you what corn looked like before that came out. And then I think that'll help give it a little bit of context. And then we'll talk through what new crops look like, what old crops look like, and we'll look at wheat and we'll talk about what we should do. So first of all, this is our main corn screen here. Okay, so you've got the daily chart, the 4-hour chart or 240 minutes, and the 1 hour 60-minute chart. And what you can see is off this big move to the downside that started on April 18th. We went pretty steep, and that was a wait of similar length and duration to this prior wave. And you can see the indicators down here triggered little divergences and got into oversold territory a few days ago. Now, these can stay oversold for a long time, so it's not an issue until you get a day like today where they trigger an actual reversal pattern. And you can see on the chart, you've triggered a 1, 2, 3, 4 close reversal after taking out the lows, reversing and closing above the 4 prior closes. It's a really significant day. About the only thing you can say that wasn't really bullish about today is that we did not close above yesterday's high. It doesn't make it a bearish bar by any stretch, but it's not as bullish as what it could have been. And so you got to look at your shorter term charts to see kind of where we are. And you can see what we did here. First of all, you should notice that the 1-hour chart blew back through its 1-hour cloud. The 4-hour is right below it. So this is not a clear signal here. I don't know what's going to come next. You can see we have completed 5 wave counts on both short-term charts, and you can see we have an A count in the 60-minute chart. So I would expect this to push higher and complete an A, and then we should come down and get a B, and then we should move higher yet to come get a C. And so you should see this move take corn out the top of both of these shorter-term clouds, which would become bullish, and then it would create a little bit of an issue if these counts are right, and we're able to trade above this high back here at 612, because that violates our hedge line, that violates this, takes away this full move, and violates this low back here. And if you look at this duration and angle of that move, you wouldn't expect it to come back up above this low. I would expect that low to hold. I know it doesn't have to, and that's not a hard and fast rule, but if you're in that big of downtrends, you would like it to not hold. So if it does trade higher and up into that, then I think we can say that a tradable low is in place, and you're going to probably work higher. And I don't know what's going to drive corn. I don't think anything fundamentally has necessarily changed there, but as far as buy signals go, this is a valid one, and we should see it work higher. And as long as this 1-hour cloud holds, then I would expect it to keep chopping higher. Now let's look at new crop, because it's even a little bit more significant than yesterday's or than old. And the reason I think that is because we just have a bigger bar, and we fully engulfed 1, 2, 3 closes, and we closed right at the 30 mark, which is right at yesterday's high. We traded above it for quite a bit of time. We're also deeply oversold. We have completed 5 wave counts on both of the short-term charts, and we have A counts that are working on both of them. And you can see we also retook the 1-hour cloud on the 60-minute chart. So as long as we hold up above this 530 level, I would expect this to continue higher as well, and then have a correction and then higher. Now, what's confusing about this is that this level right here, which is 550, is the bottom of the shelf that's held for all of March and all of April, and that we fell from. If December corn trades back into that level and trades back up above these lows, what you will have is a move down followed by a move back up, which is called a bear trap. And if that bear trap happens like tomorrow with a steep up day that equals this, then I think that would become even more significant that that is a bear trap and that we are going to go test the higher levels. So as far as hedges go, some people are going to want to run and jump and lift hedges right away because they're going to say, oh, I'd rather get out here and get the chance to resell it up here. Well, I don't think that there's enough evidence here yet that this is done. And here's why. One, that's a big shelf. And the odds would tell you that this isn't going to become a wave of equal weight and that this may not become a bear trap. So I don't know that it makes a lot of sense to preempt it, because if it does turn around and fall, you may not be able to catch it fast enough, and all of a sudden now we're trading down at $5 and you're like, what the heck happened to me? So I think it's prudent to hold, especially for anybody that is really dependent on their corn price because they're leveraged or they really need the cash flow from the bushels. So I think it's prudent to hold until that confirms as a bear trap, which I'm not saying it will or it won't. I hope everyone understands that. This is a signal that can turn into that, but I don't think we want to dump it just yet because I don't want to just front run it and assume something's going to happen and until it does. Because the other thing that we see happen over here is you can see A's are followed by B's. And if we get a B, a lot of times a B wave turns into an extended 5. So this count is not set in stone and it's not a done deal. You can come down and get a B, which should result in a higher bounce, but sometimes it just rolls on over and often an A becomes your most powerful sell signal. So we're going to watch and pay really careful attention to these clouds. And as we trade up into those clouds and through them, it's going to make us a little bit more bullish. If we trade back below the hour cloud, it's going to turn us a lot more bearish. Okay, so let's make this super simple. We have a shelf at 550. Anything below that, we're bearish. We have a lower 4-hour cloud at 540 down to 531. Anything below 540, we're bearish. We start to turn a little bit more bullish on our way up to 550, right? And then anything above this 1-hour cloud down to 520, we stay maybe a little bit more neutral, maybe a little bit more bullish. So this is all a signal to us to hold hedges. I definitely wouldn't run in and bet the farm that we're going back to $6, because if we do go back to $6, what do we have to do first? If you're trading 529, before you can get to 6, you have to break 540, you have to break 550, you have to close above those levels. And then ultimately you've got to break 570 and 580. So you've got lots of areas where you can adjust your position and not take excessive risks, because then if you fall back down out, you can at least resell it at these levels. So that's going to be easier to catch than it will be right here if we just reverse all of a sudden and go. And what would cause that to happen? Well, hey, we have great planting weather, and it could just be a fake out by Russia. We've certainly seen that before too. So I don't think we want to just rush in and buy everything all of a sudden. Now I'm going to show you wheat, and that's going to make you more bullish because it's a huge bar. We took out 1, 2, 3, 4, 5 closes. We climbed back up above the breakout below this low and below this low. We closed above both of them, which is significant. We closed above the TDST line, which is significant. We completed a 9 count, which is a big deal. And so everything here is really set to go higher. But if you do have a false breakout to the downside out of this range, remember we've been saying this range is significant because once we break out the top or the bottom, we should double it, which implies a potential $3 move one way or the other. And this is now a false breakout because we were unable to hold it. So now you would assume that we may come test the top end of this line. And remember, this day right here was a Russian news day. So it was up 40 cents. And then we had a little follow through the next day and everyone turned bullish, including us. And then wham, we all got our heads ripped off because the market just dropped like a rock. So now here we are back in the same situation in reverse, and it very well may head up higher, but look at what we have to deal with before we can really turn bullish. We've got to get back up above our hedge line, and really you got to get back up above this level here. So before anybody goes out and starts lifting hedges and putting on tons of reownership, I would advise just to be careful, because your insurance level's up here. You don't know what your yield is yet, and leave sales on that you have for now, because if we need to come and do something different, we can do it out at the top side. I think this is no man's land right in here, because the reversals are just too powerful for anybody to deal with. You know, if you're trying to trade futures in this situation, they move. The futures are moving in nickels, not in quarter-cent ticks like they're supposed to. They're moving so fast, it's almost impossible to get in and trade them. So I would just be careful. You know, we also saw a upside option volatility just skyrocket in this market. So, for instance, the $8 calls, I was watching them early this morning, and they were 15 cents a bushel. By the time the news broke by 8:30, before the market moved, they had gone from 15 to 25. So they gained. The futures moved 10 cents, and the options moved that much as well, which means they had about a doubling of volatility premium in them, taking it from 10 to 5. And so as the day ended, I think this option closed at like 35. So it was a really big volatility expansion on the call side today, which means that these hedge funds are nervous, because they're now throwing money at premium to protect themselves. They're thinking, hey, maybe we have this nice gain in the short position. Let's not let it get away. But remember, the catalysts are completely intact for a sustained rally here, because you've got the geopolitical pressure, you've got the inflationary pressure, and we also have the large short fund position coupled with a farmer who doesn't have any bushels, and we're below our insurance price. So the natural seller of the market's not in there, and there's only a trapped fund that's got to buy it. So that's why the options premium's inflated, because the options writers are trying to push them into cover futures as well. So that could just really reinforce itself as it works. All right, beans. Let's look at that market too, because they were fun today as well. You have this big lower shadow. You have a hook reversal, which isn't quite as bullish as the rest of the markets, but not insignificant at all, given that it's really now a triple bottom at the 1250 level down here. So I think beans are going to follow corn and wheat, and if we come up and test the 13 level again, that'll be significant. Old crop had a nice day too. I've got too many indicators on here. Let me take these off so you can get a clearer picture. Okay, so this market, big long lower shadow, third reversal in 4 days. 2 bullish ones, 1 bearish one. And how do you negate a key reversal? Well, you have a hook reversal the next day. How do you negate this one? Well, you take it right back out and go down back out the bottom of it. We almost got to new lows down here, but failed, and we do have a little bit of a divergence from this low to this low, and a little divergence back to this one here. So there is an argument that the low was in on beans, but we'll need to get back above yesterday's high at 1240 to really kind of confirm that. And of course, our hedge line is at 1445, and the top of the daily clouds at 1462. So more work to do on beans before you really want to jump in and turn bullish those. But definitely today's action was significant enough to pay attention to. So in recap, no new recommendations yet. We're not going to lift hedges on corn. We're not going to lift hedges on wheat yet, because we're pretty comfortable with where we are until we get above our hedge line and above our clouds. And then once that happens, then we're going to have to turn bullish, and we hope that the fundamentals will lead us there as well. So exciting day. It's fun to see lots of movement, I know, and we'll just have to see what happens. And remember, a day is not a trend, and there is risk trading futures and options. So if you have questions, call us. We'll talk about your positions. If you want out early and you want to take the risk to today's low, let us know. We're happy to help with that too. It's not wrong. I just think it's more prudent to wait, because trends tend to be pretty sticky, and they don't just turn around on a day. So we'll keep paying attention, and we'll see what we do tomorrow. Hope you guys have a great day. We'll talk to you.